All right, Patrick, for our fifth, and we got one more sticky note after this, but for our fifth sticky note, we're talking about, is the economy showing early signs of cracking? Now, I want to talk about and show a couple charts that just illustrates, and if you look at this chart here, you can see how compared to all the other rate increase cycles, and by the way, Patrick, these are cycles. You and I talk about this all the time. We're currently in a tightening cycle where they're tightening credit in a big way. And you can see in this really cool chart where the cumulative change in the overnight rate, how in 2022-23, which is the cycle we're currently in, number one, it's gone higher than it's ever gone before. We've raised more than we've ever raised before, from 0.5%, 0.5, all the way up to 4.5% now. And it's gone on longer as well. So not only more than ever before, Patrick, longer than not ever before, because you can see in 97, 98, it was a little longer, and 04, 06, it didn't increase nearly as much, but it happened over the course of 21 months. So very cool chart to kind of show the difference between the current tightening cycle compared to other tightening cycles.
Well, that's the thing around it. And then what's different about all of this, I think, that makes it different than all those previous years is the rate of inflation. And a lot of that inflation is being driven by, the cost of carrying a mortgage, for example. So in CPI, the interest carrying cost is part of what's driven that inflation. We see the increase in food and fuel and all the rest of it. It keeps biting at the amount of disposable income that the general consumer has. So these are the effects on the economy that we're starting to feel. And I can't stress enough, the taxflation that I keep talking about, and it may sound like a shot at our government, and it is, but it is the reality, is that, I think our gas, the most recent stat I got is our gas charges, the tax on just our gas is like 80 cents a liter. So when you start to look at the numbers, you realize that people are out of pocket. So in other words, disposable income continues to decrease.
So then let's blend that conversation, Patrick, into the unemployment rate, because listen, the fact is we're talking about early warning signs of the economy cracking, but the unemployment rate is still an all-time low, too low, as you've indicated many times. And if the unemployment came up a little bit, which is, by the way, what the Bank of Canada wants and what most business owners want, is for the unemployment rate to come up. So even though the media is going to promote the unemployment rate coming up, which it might tick up, whatever, 0.5 point, 0.5%, 1%, I don't know what it's going to tick up. But if it does tick up, it will only be a welcomed reprieve, or is that going to be marketed as the economy cracking?
Well, I think it's been, it was just a very slight uptick, and it was very specific to a general cohort of 15 to 24-year-olds. But that plays into the fact that what's happening is that the service industry, for example, some restaurants, the food services, if you will, and even the accommodations, by the way, are slowing down a little bit. And that is a real popular place for that age group to work. So those things are slowing down. I think what we have to keep a closer eye on is that as construction slows down, as builders start to touch the brake, if you will, and we've talked about this many times, and we're starting to see it show up, is that I think we're going to start to see a softening in the more important part of the industry, if you will, which is the construction. And I think we have to watch very, very closely on that. Now, I think it would be great news to see it uptick to 6.5%, even 7%. Historically, that's 6.5%, 7%. We've lived in that kind of unemployment rate for years, many years. We've normalized 5%, but ultimately, if we see that 6 to 7%, we're in good shape. I think that's where we'll see the economy is actually more robust, healthier for sure. Wage increases will be really well managed in that regard, and I would actually like to see it in that range, to be quite honest with you. And that's kind of what I got on that.
I think, given the baby boomers and the trends we have with our population, I'm not sure we're going to see those kinds of unemployment rates, but time will tell.
Time is going to tell, and I think you make a good point. We may not see it, but again, it's industry specific.
That's
So
right.
as much as we may not see 6.5%, 7%, I think within an industry, we're going to see that pullback. And keep in mind, we still need trades. And what we've got for immigration is not trade quality individuals. There's lots of tech quality individuals that are coming in, and administrative, those kinds of things. But ultimately, we're not seeing trades come in. They keep threatening to get more specific. They haven't done that yet. I don't think they have that kind of control, to be honest with you. I don't think they're that well organized. Time will tell.
They're definitely not that well organized.
If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.
If you want to see more stuff like this, click here. If you want to see the entire show, click there.